Weekly stock market update part one. This is the news part, remember. This is the bit where what I try and do is give you an update related to the stock market, where the opportunities lie, but from the macro perspective. Things you won't be able to get in the news, the things that I used to discuss on my Bloomberg TV show. Basically, original insights, which, as I said, you can't get elsewhere. So let me run through some of the key ones. I use a plethora of networks and sources for this information as well as my own experience. So I thought this image sort of captured that somewhat, if you agree. So these are the 10 points I want to talk about. Then I'm going to talk about how I translate that into the areas that I'll be focused on in part two of the weekly stock market update, which are specific stocks and how I see things. Just to give you that background again of how I come about making the comments that I do. Of course, I've got all the stock market data that you would expect, but beyond that, I used to be a director of the United Nations Association in the UK, council member for 6 years on Chatham House, the Royal Institute for International Affairs, the number 2 think tank on international affairs in the world, and the investment committee for 12 years, where we would allocate capital. Our patron was Her Majesty the Queen, is now His Majesty the King. A visiting fellow in business at Oxford University, where I'd lecture on behavioral finance. So again, using academia, think tanks, like the UN, Department for Business and Trade, where I currently for the last 20 years have been one of the government's deal makers. My job to find the most extraordinary intellectual property from around the world to bring it to the United Kingdom. I've covered, in that role, I'm deal maker for India, Southeast Asia, China, and Bloomberg TV, my own show, again, going through the markets, having that insight that you would expect me to have, right? So, brings me into contact with a lot of people. I hosted events recently in Parliament and so on. China, cybersecurity, security generally, national security, and Prince Andrew. This issue of this issue of spying and espionage relating to our intellectual property is really annoying the security services because it is just not being taken seriously enough, which is why I think this extreme measure was to bring it to the attention of the public as well. How does that translate into, do we go out and buy Palo Alto Networks? Well, actually, Palo Alto Networks is in a nice little upward trend, a bit expensive at the moment. So my friend Nikesh, who is the CEO, and he and I were on the board of TIE, the Indus Entrepreneurs. Have a look at tie.org. We co-founded the UK chapter, but now he's the CEO of Palo Alto Networks, and he used to be the number 4 at Google. He's doing a great job. One thing he understands is making money and marketing. He was the number 4 at Google. His job was head of marketing. He's now CEO of Palo Alto. So he's going to make sure that they keep getting that message out on the cybersecurity front and the company. I'm not saying it's a buy right now, nothing like that. I'm saying there'll come a point where I might try and pick it up when it's a bit cheaper. But that whole cybersecurity space, we need to keep a very close focus and eye on it for opportunities. Money is going to be spent by governments and institutions into that. And by the way, Microsoft is a cybersecurity company. If you think it's just an AI company, you're wrong. The other thing which caught my eye this week is treasuries, companies with their spare cash holding Bitcoin, but not just companies. The state pension of Wisconsin bought Bitcoin in July. Okay, so it's becoming more legitimized. Trump, as you know, has made it very clear he's going to make the United States the center of crypto. So you can see where some of that momentum is going. It's not necessarily spilling into other coins. I've discussed more about this on the Great Investments Program and specific coins that I own. For instance, Ripple, which I bought years ago, went nowhere for years. And I've said it occasionally, I'm underwater, don't take my view on crypto. Then, of course, all of a sudden, Trump becomes president and I'm in the money with Ripple. Anderson Horowitz, who set up in the UK, my wife deals with them in her government role as head of the British government's venture capital unit. They're one of the VCs behind some of the biggest tech companies in the world. Okay, they're the ones who bankrolled them, funded them. They're the ones I'm going to approach for funding my software on training and educating people to be better at investing. Anyway, they're also an investor in Ripple, and they're extremely clear. No confidential information disclosed here. They've said it to my wife, they've said it publicly, but they're an important player in this space. And what they said is under Trump, crypto is going to be huge. Okay? Look up Andreessen Horowitz and see why, when they speak, it really is important. They're the company you've not heard of, who are the company that are behind the biggest tech companies. US household consumption is up. This is the bit that people don't realize. There is a lot of spending going on which is not showing up on the figures. And it's not just in the US, it's in the UK. You walk around the streets, spending data, official data, doesn't necessarily cover the fun bits, the restaurants, the travel, all of those elements. It sort of puts in toilet roll as well. And so it doesn't necessarily reflect what the biggest spenders are doing. It sort of gives a really broad pitch. But anyway, this is positive outside of tech. It's positive in terms of profitability. Two things which are incredibly important for sentiment, for investment by companies. Remember, there's only three groups that spend. You've got obviously consumption, private individuals, companies undertaking investment, and government spending. And out of those three, you ideally want all three to be going in the same direction. Now, if government spending is to be cut in the US because of the Department for Government Efficiency, led by Elon and Vikram, then you certainly want consumption to be holding things up and corporate investment. And it looks like those two legs will. If all three are spending, then you get inflation, and that causes another problem. King's Cross, again, my wife was out there looking at Francis Crick Institute and the like. Not a statement you would have said about 20 odd years ago. My wife was wandering around King's Cross. If you look at the foreign investment into there, for instance, from Singapore and their sovereign wealth fund, Temasek, for instance, and just the Singapore government and their state-backed sovereign wealth fund, and how much money they've put into that area. And if you got into, say, somewhere like Battersea, you're getting masses of investment into London. You're not getting it going around the rest of the country by any measure in the same levels, which is a problem the government wants to resolve. But the point is this: you are continuing to get immense investment into the United Kingdom, contrary to what you might think, and especially into some of our institutes producing intellectual property. Obviously, there's a threat of that being stolen elsewhere, but we have a competitive advantage. Intellectual property is broader than just the tech companies, and that's where the wealth's going to be created. When I was at the London Stock Exchange this past week, speaking to the head of technology primary markets, Neil Sharp, I can tell you the focus for the London Stock Exchange, contrary to the headlines, is the only move it could make, which is it's going to focus on IPOing smaller companies, not the big giants that NASDAQ is going to take, the smaller ones, which NASDAQ doesn't have room for. Okay, because NASDAQ is full of multi-billion-dollar companies turning over 800 million plus. Those less than that have no choice but to come to the London Stock Exchange as a credible foreign market. Those IPOs are still happening. The idea being London will take those, grow those companies, and then of course those companies can leave. They'll either be bought out like an autonomy, or they'll relist on NASDAQ or the New York Stock Exchange. If ever you wonder why there's companies on there which have the last three letters PLC, that's because they were once in London, now they've moved. That's fine. Okay? It's been happening for decades. We've got no choice at the moment. We're too small to compete head to head with the Americans, but finding that niche, that's interesting. That doesn't necessarily mean I'm about to go shift all my money into London Stock Exchange or anything like that. It's not what I'm saying. Just giving a broader balance that when and if we cover UK stocks, for those who want UK stocks, there will be room for some in technology. And I'll keep an eye on those for you anyway. Greenflation, green technology, copper. A former mentor of mine, Lord Bagri, was the chairman of the London Metal Exchange, and I used to sometimes write speeches for him. So I got to know a lot about copper through speaking to him. He and his son mentored me. His son was actually the first chairman of TIE, TIE.org, the UK chapter that I co-founded with him, his son, the now CEO of Palo Alto Networks. The point being, I like to keep an eye on copper, and I'm going to keep an eye not just on that as growth increases globally, but also because it's it's a diversifier through an exchange traded fund and so on. And the right moment, we'll keep an eye on. I think it's going to be important to have things not just in, Apple, Amazon, etc., Broadcom. Retail money is piling into exchange traded funds. It's piling into those individual stocks which are tracking tech. Retail money can also panic. Retail money can move markets and it can panic. So yes, through the weekly updates that I do, we're keeping a close eye on these stocks whilst I've got, as my clients will know on the Great Investments Program, 2 times leverage even on some investments. Have to keep a close eye on them. There is a time to make a lot of money in a short space of time. You can't make a lot of money for a very long space of time in investing because you get market pull downs, which will drag you down. But that means keeping a closer watch because, for instance, you're leveraged. So I'll continue doing that on the Great Investments Program. Data center cooling, national security. Data centers have been identified, certainly in the UK, as a national security asset by the new government. And when I hosted my event in Parliament last week with a bunch of cybersecurity companies, one of the things that came up was the protection of this national infrastructure. So I'm going to continue looking at these data center companies and which ones look attractive. It's the sort of secondary market. You can, when there was the gold rush, you can go for the gold mining companies or the gold prospecting companies, but you also want to go for the ones making the shovels. And the data center ones are to some extent being overlooked and on the cooling side. And there's quite a few in the US, and we're going to keep diving into this, but we need the numbers to be right. If it's the Great Investments Program, it has to be value, growth, income, i.e. undervalued companies showing good growth, good dividend yields, and so on. Remember, this is the first part of the weekly update. This is the bit where I talk about the macro stuff and then relate it to individual stocks in the second part. We don't go on narrative, we go on data. And the data means we look at our database of 10,000 stocks, which can be in my pension, by undervaluation, growth, dividend yields, and the like. Okay, 2 more things to talk about. India, well, you don't need to look at that. You can look at me for a change. On India, that growth story looks like it's going to continue. I've just posted on the on the public Telegram channel. If you don't know where that is, have a look. That side, alpeshpatel.com/links. So if you look at that, you'll see I've posted on where GDP is expected to grow. Now, India's had a bumper time. We will, when the opportunity arises, look for exchange traded funds which are country specific when it arises. It's not necessarily in it, and there has to be the right vehicle. So I'll put that on the Great Investments Program regarding country specific ones. On the ETF side, ETFs can also be a good way of getting into, for instance, AI in a broad basket of stocks if you don't want the risk and volatility of individual stocks. And one thing that's happening at the moment is individual stocks are being punished if they dare not be singing full throttled about how wonderful the future looks. Okay, they can easily drop 15, 20, 30%. And for that reason, we want to perhaps shore up some more of our funds because they mitigate against individual stock volatility. We are going to start launching on the Great Investments Program model portfolios, which will show you historic volatility of a basket of stocks that we currently hold. So you can see, well, actually, that's all well and good having it now. How did that perform historically? So that you can see, well, actually, that's too volatile for me. So if that's what it did in the past, I certainly don't want it in the future. Okay, and it also allows you to have these lazy portfolios. So with that being launched soon, we've launched the community site, don't forget, where Great Investments Program people can speak to each other. Share buybacks. Now, when a company uses the money it's got, the profits it's got to buy its own shares and cancel those shares out of the market, there's less shares and therefore the stock price rises. That is not growth. It's not organic growth. There's a lot of this going on, which is shoring up stock prices. It's not necessarily a bad thing. Warren Buffett quite likes it. Okay. But don't mistake that for growth. At least it's not asset price inflation. It's not just the market bidding up a price. It is based on the fact that profits are now divided not by 100 shares, but you've halved the number of shares by 50 shares. And that can help boost up the stock price, again, supply and demand. So that's a caution. However, a friend of mine, new on the Great Investments Program, but a very old dear friend of mine, showed me the Apple Vision Pro, and I was blown away by the quality of the technology. Now, that doesn't mean I'm going out to go and buy Apple, because I think the problem Apple have got is they've created the Concorde, something elite for very few people, amazing technology, way ahead of its time, but they're going to have to create a cheaper version, which will be more mass market, which he tells me they're planning. The point isn't even that about Apple and the Apple stock. That'd be just too, well, it'd be too amateurish. The point is that if they, as a company like this, I've said it time and again, these big companies are able to monopolize talent and have so much capital to put behind that talent that even if somebody else had talented individuals, if they haven't got the money, they can't invent the stuff they want to invent. These companies can get the talent and the capital behind them. If you get talent and capital, and this is what I do with my role in the government, where I look for in India, and I'll be out there in February looking at various tech companies to bring to the United Kingdom. And I've done it in Shanghai in the past, and yes, it is rather odd sitting in a room with 25 Mandarin speakers and a translator and explaining to me you're from the British government and you're looking for extraordinary intellectual property. But here I am, alive and free. The point is, when you're looking for that intellectual property, if you've got the brains, that's fine, but if you haven't got the capital, it's pointless. Equally, if we find the people with the capital but they haven't got the IP, it's no good. One of the smartest technologies I ever saw was by a scientist that Anna Mahendra, the Indian billionaire entrepreneur, hired, and it was a nanotech metal manufacturing company. We brought the guy over here, not enough capital, not enough scale, but the scientist was immense. These big companies have the money and they have the IP, the intellectual property, and the ability to create it. That gives them a huge advantage. And when I looked at Apple Vision Pro, it occurred to me that, wow, definitely the case, and 10 times over. There's nothing specific to take from that except that I'm very comfortable in the Quality 5, indeed the Quality 5 Plus that I have, and the leverage positions I have in them, but they need to be watched very closely. Anyway, you'll see more detail on the specifics in part 2 of the weekly stock market update. For now, this is a broader overview. I hope you found that helpful and useful to you. Thank you all very much. Thank you for watching, and well, as the thing says, whoops, oh, no, nope, over there. It's because it's reversed. As it says here, do subscribe, comment, like, share, and do have a look at the links. Those links there, please. Okay, I think you'll find them very helpful. Lots of free materials there as well. Thank you very much.